Hey, everybody, Tom Gentile here. Welcome to Patterns and Profits, the podcast. This is for week ending September 13th. Lot to unpack today. A lot to unpack this entire week. 23 years, 23 years since 9/11. My goodness, my wife and I were talking, and we were just saying, "Wow, it feels like we feel like those people where, hey, do you remember where you were, during World War II? Do you remember where you were when President Nixon was carried out of office?" So wow. It's still sombering to me. It's still, for me, it feels like yesterday when I see the memorial and I see the moments of silence, and it still hits me. But to think about the fact that there is a generation that never went through that. 23 years ago, you got folks that have a lot that have been born afterwards. It really puts things into perspective. I want to talk about the markets today. I want to talk about the Apple announcement. And of course, we're going to talk about the presidential debate. I want to talk about all of this in terms of where we see the markets going and where we see stocks going. So, like I said, a lot to unpack in this podcast. So, I'm looking at SPY. And I'm looking at where it's been year to date, where it's been since 2023. I'm looking at things like as an election year. First of all, if you invested in SPY at the beginning of the year and you said to yourself, it's an election year, we're going to be up, we're likely going to be up, you got a good number. We're up about 10% on SPY so far. Give or take a little more, a little less on the rest of the indices, give or take a little more, a little less on individual stocks, maybe a lot more, a lot less, depending on the stocks that are in your portfolio. We came off, and I mentioned 2023 because we came off a good year for 2023. Remember, 2023 was a bounce year. We bounced off that bear market correction of 2022. And we had a great 2023. So the fact that we're up double digits going into the final few months, we still got a quarter to go, and we're already up 10%. And so I think, when you look at the markets for a year, looking really good. The last few months, however, been a bit volatile. You take a look at, and for me, I can look at the S&P, and I can see the volatile months over the year. In fact, I did a video earlier this week where I showed you line on close charts on the S&P, on bonds, on oil, on gold. And what I did was I took out the wicks. I took out the highs and lows just to give you more of a perspective, right? And how to look at this through the eyes of an objective trader, taking out all those high and low volatility moves. But still, you have August, which was, I thought August, we saw August coming in as a month that was typically down. Well, guess what? Most of the move to the downside that happened this year happened in the last 2 weeks of July. If you remember, the S&P was hitting new all-time highs in the middle of July, and we did a turnabout. And come beginning of August, we were down significantly. We had double-digit pullbacks. We had pullbacks that were big pullbacks. And then what happened? We snapped right back. August had that V-shaped correction that I talked about. And we came very close to new all-time highs coming into September, coming into Labor Day. Since then, we started the pullback once again. And so I laid out some areas that I thought we could go to. We could talk price till we're all blue in the face, but let's talk patterns, because this is patterns and profits. So the patterns are that typically starting in August and running through September, the markets typically have a down month. And I laid out 3 different scenarios for patterns using my money calendar. And we looked at short, intermediate, and long term. And if you look at short term, we run short-term buy and hold for less than 30 days, you're looking at the entire month of September as a down month going back 10 years. You look at 30 to 60-day strategies and you start to change to bullishness come middle of September, September 18th. So we got another week of this if you're a 30 to 60-day trader. If you're trading out past 60 days, then you got to start thinking about buying opportunities right now, okay? Because you're not worried about what's happening in September. You're not even worried about what's happening in October. You're going out and looking at November strategies. You're looking at post-election, right? And I'm not talking about what's going to happen in the next 4 years. I'm talking about what's going to happen between now and the end of this year. We're talking about strategies where you're looking at exits somewhere in November or December. So again, short term, bumpy, intermediate term, so-so, long term looks up. And again, am I 100% accurate on this? No, I'm not. Nobody is. But what we're doing, folks, is we're taking an objective view of the markets. So when you look at SPY, we still got some headaches to go through when it comes to the stock market and seasonality. How about bonds? Bonds are getting close to their year-to-date highs. The last time we saw a high like this in TLT, you had to go back to January because TLT dropped quite a bit. I mean, we had about a 10% drop in TLT between January and May, but it's come right back. Now, what is the seasonality forecast for bonds? Well, guess what? It's bearish, just like the stock market going into, now the bonds actually, the bearish just goes into October, but then it turns around. And before election day, we're going to be seeing bonds as a bullish opportunity. So it's kind of congruent with the stock market. What about the US dollar? And I'm going to talk about the US dollar. I'm going to talk about the US dollar a few times here before I'm done with today's podcast. But let's just talk about the US dollar in terms of seasonality. During the month of September, the US dollar typically goes higher. Now, so far for the month of September, we've seen the US dollar drop a bit, okay? But we see a higher dollar for September, and then we see coming into October, changing course. How about oil? I mean, what's going on in the oil markets right now? We got a war in the Middle East. It's been going on for years now. We got a war happening in the war that's happening for years has been happening in Russia and Ukraine. The war that's been happening now for almost a year is on the Gaza Strip. So why isn't oil going higher? Oil's been trending down. Oil's been trending down because of the math. The math is when you pump more oil, then you're going to see a reduction in price. And that's what's happening right now. But what's the pattern for oil? What's the seasonal pattern for oil in USO? For September, about mid-September, it pops up. But then we drop again starting in October. All right? What about gold? Gold's just been killing it this year. I mean, you look at GLD, we were around in the 180s at the beginning of the year. We're in the 230s right now, and it doesn't want to drop, even with the seasonality being bearish between mid-August and mid-September. Gold is still strong. Heading into an election, still strong. My target for GLD, about 10% higher than it is right now by the end of the year. The seasonals are weak, but the seasonals are taking a back seat right now to volatility. And let's talk about volatility for a moment. Now, I said that August had the highest volatility. So if you take a look at the VIX, VIX, and I did a video on this earlier this week. So take a look at my market update video. You'll see the VIX on a closing high as we entered the end of July. The closing high was in the mid-20s. 25. Yeah, we had some spikes, much, much greater than 25, but the closing high, 25. And I'm looking at daily and weekly closes. But you know where we are right now? We went from 25 to 15 in August. We come rip roaring back, and we're now back in the low 20s, low to mid 20s. We might exceed 25, that closing high here within the next week or two before all the volatility subsides. All right. So, I talked about what's going on with the patterns with the stock market. Stocks are pulling back from their all-time highs. Bonds are higher. You got some strong ETFs right now in the bond market. Gold is still holding up. Bitcoin is taking a back seat in the last week or so. It's gone from $65,000 per Bitcoin. Now it's dropped down into the mid 50s. So it's doing a lot of what the stock market's doing. VIX is closing on the high side. Q2 earnings are pretty much gone. We'll start Q3 next month, but you're just getting the stragglers right now. So that's where we are when it comes to market update. Let's talk about the two biggest news announcements that happened this week, because everything else is taking a back seat. Forget what happened on Wednesday. Forget what happened on Thursday. Forget what happened on Friday. It's what happened Monday and Tuesday that everybody's still talking about. So let's start with Apple. All right. How many of you watched the Apple announcement? That's kind of like their coming out party is always in September of every year when they do their release. They do roughly two releases. I call them release parties. They do two release parties every year. They do what is it? the Worldwide Developers Conference, all right, WWDC, and then they do the Apple Party, the September Apple Party, which is typically the first, second week. They're typically around September 11th. They did this on September 9th. There's, I took advantage of a part of this. I'll talk about it in a moment with this latest release. Did they release any brand new products? Not really. You remember last year they released the Vision, all right, their Vision Pro, and I don't know anybody personally that bought this thing. We own a couple of the MetaQuests, barely use them. I thought we'd end up using them. The MetaQuest, which is the augmented reality, virtual reality headsets. I honestly thought we'd use them to watch movies on, because it actually makes for a really nice movie view. But at the same time, I'd rather watch a movie on a big screen or on a flat screen with my wife next to me, so we could see each other during certain parts of the movie that might be funny, or there might be the action part of the movie. So I don't own the Vision Pro. I think I honestly think they've got a long way to go before they make something like that mainstream. And I don't think they want to make it mainstream right now. So it's kind of like the Google Glass of the 2020s. Remember Google Glass? I own that. That might be a collector's item right now, Google Glass. But, I tried those out. I wore them. I thought they were cool for about a week. And then I realized that I just like looking at the laptop instead. Now, Vision might have something better, but I'm just not ready to do it yet. I'm not ready to change the way that I look at things. But, look at what they did do. So no new products, but they got a new lineup of old products. They got new versions of watches. They got new versions of iPhones. They got new versions of wearables. And all of these, most of them, have a focus on AI. Now, their AI, and I thought this was kind of cool, was instead of artificial intelligence, they're calling it Apple intelligence. So, all right, $1 million question is, how does this affect the stock price going forward? Now, if you were to take a look at Apple stock price, okay, so Monday they make the announcement. This is definitely a great example of buy the rumor and sell the news, because right after that announcement was made, you kind of had that bump up. And where did Apple's price point go? Well, in September, it was trading as high as 230, and it was in the 220s when they were talking up everything, but really kind of dropped down, and was trading really as low as, I want to say, the mid-teens, the mid, like 215, 216, etc. So that whole buy the rumor, sell the news thing is kind of gone. And now Apple's moving the way of the overall markets. But I want to talk about going farther out than this week. So, what do I think about iPhones and Apple? What do I think about their new products? And what do I think about their accessories and such? Well, I think if you're a long term Apple buy and hold, you got to be happy, because, I mean, first of all, look, here's the thing. It's going to be time for folks to trade their phones in. And before, it was all about um, it was all about the latest phone releases and satellite communication for emergency services. Okay, and it was about getting on the 5. What is it? What's going to make people jump out of their old iPhones? And I'm not talking about last year's. I'm talking about the 12s, the 13s, the 14s. Those. I own a 14. You know what the biggest thing I hate about trading up to a new iPhone is that I'm going to have to do some work, because I got to look at all these apps. And yeah, they're supposed to migrate in, but they don't always migrate in correctly. And I got to start thinking about passwords. And I start thinking about, I've got to go back out and do a lot of work to get everything working the way I want. I've learned that no matter how much something hits me when it comes to new technology, I want it to sit out there for a while. I need, with iOS 18 that comes out, I need 18.1. I need 18.2, 3, 4, 5. I need some of the latest upgrades to the software to come in, the iOS system, to come in and fix some of the crap that they weren't thinking of before they released the hardware. But look at the significant revenue, first of all, it's generated from iPhones. And look at the fact that artificial intelligence, you have to have a 15 series or better to take advantage of generative AI on an iPhone, right? The other thing that I like is that, and this happened last year, the USB-C. So finally, we don't have to worry about chargers, about buying new chargers every time the Apple decides to change the product line. We went from that big fat charger years ago to the Lightning charger. Yeah, now we moved to the USB-C, but everybody has USB-C chargers already for the most part. So that's great. It also has much better communication using using the USB-C cord. You got better cameras happening. Now, I use my iPhone. You know what I take pictures of? Receipts. That's my portfolio. That's remember when I went here? Remember when I went there? But I'm not the regular person. The regular person that uses an iPhone uses that camera. And that new camera feature looks really great. You've got new technology. You've got, again, the biggest thing is generative AI. Now, let's talk about wearables. Okay. So the new watches came out. They got the bigger face. I think that's a great plus for Apple. More importantly, now you don't have to stick the watch right in your skull to see what time it is. You're now going to be able to see it from an angle. I think that's a great plus for the watch. Here's another one, the AirPods. So the fact that they're now touting a clinical earpiece as like a clinical hearing grade, you've got that hardware built into the new AirPod 2 Pro. That's a big deal. Okay. I'm going to be transparent with you right now. Here's something I suffer from: tinnitus. Yeah. I constantly hear the flashbang in my skull. It's not bad enough where it's the only thing I hear, but if I'm in a room and it's quiet, I hear it. So if there's anything that helps me, it's hearing sounds. So maybe this will help my tinnitus. I don't know. I will tell you this: those Apple II, um, those Apple Pro 2 or Apple 2 Pro AirPods, those things are great. I got to tell you, and here's the most important thing that I got to tell you about at least about the accessories. They had them. They had them in stock and ready to go. Once the coming out party that Apple had with their new product release was over, and they opened up the store, I ordered the AirPods. I got them. I ordered them what, Monday? I got them on Tuesday. That's how fast they came. They overnighted these things to me. They should have. They weren't cheap, but the fact that you don't have to wait weeks anymore for this stuff. They're finally ahead. They're ahead of the curve, or at least they were on release day. So I got them, wearing them. They're great. So that's a big deal too. I mean, MacBook and iPad updates. I really didn't see anything out of that. And I've got the MacBook Pro, the latest MacBook Pro. I think it's phenomenal. I mean, is it heavy? Yeah, it's a little bit heavy, but they just continue to outdo themselves with their new M chip series, and so and of course, I've gone from I'm one of those guys that used to have all those screens on his desk. I don't need that anymore. I got the iPad and I got a Sidekick. It's just basically a little monitor that hooks into the laptop. So I've got multiple screens without having all the desktop usage that multiple screens come with. I'm not a big iPad user. I don't. I used to have one. It didn't do much for me, but a lot of people use these things. Now, where else is Apple really kicking it when it comes to their revenue? Software services. You got Apple Music, you got Apple TV, you've got iCloud. These are continued revenue generators for them, and it really does strengthen them as a services company. I think they're really doing well in health and fitness. Like I said, they said they were going to be coming out with a hearing aid test in their health area. They have now. It's not EKG; it's EKC, I think, where you're able to look and see if you've got irregular heartbeats, things such as that. I think they're going to be going into health and fitness, and they're going to have continued subscription services in this area. It's going to help their bottom line. So they got innovation in hardware. They've got innovation in software. They've got expansion around the world. They're not just a U.S. company. They got growth in services. They've got their profit margins are still really good. I mean, how else are they going to sustain that campus that they got that looks like one day it's going to take off and head to another planet? I mean, they have to have that that premium pricing strategy, which they still have. Their stuff is not cheap, but people look at Apple products and they see the value in paying the extra prices. And I mean, they've got their supply chain on track. They're pivoting more from China. They're pivoting into India. And then here's some other things that we need to be reminded of. Stock buybacks. My God, they just continued the stock buyback program. It's like Apple's plan is to buy up, their overall goal is to continue to buy back their stock until there's nothing left to buy. That alone will cause the price of the stock to move higher. So and I'm talking about, we're talking about fundamental patterns here where this company just continues to outdo itself. I think it's a game changer. I think that AI is going to be a game changer for Apple, but I think it's going to be the long game. I think that's going to, it's not a short one. Think about this, folks. This is my opinion, but who controls most of the money in the world right now in terms of age population? Yeah, the baby boomers, the Gen Xers, and you know, we're a little slow to learn this stuff. Eventually, yes, the money and the decisions on how all that gets spent will spill over to the younger generations. But you got to think about these two segments right now: baby boomers, Gen X. Okay. And I'm talking about AI. So Apple is going to make it easy. You don't have to know anything about AI to use AI. And that's where Apple's gonna shine. And so, I think about my mother and how, does she need to know a lot about AI? No. I think in the beginning it's a little bit of a curve. But I also think that companies are going to continue to embed this stuff into their products where you don't even know you're using it. Okay? So, that's my take on Apple. Where does Apple stock price go? Well, if you're looking at it on a day by day chart, then you're seeing that buy the rumor, sell the news. But if you're looking at it in terms of long term, and you're looking at weekly charts or you're looking at monthly charts, then you'll see that Apple is just something that continues to move higher. When you look at where was it 10 years ago? Sub $50 stock. Where is it now? It's in the 200s. Where does it go from here? I think that going into the back half of the 20s, we hit mid 20s. We're already in the mid 20s. You go to the back half of the 20s, and there's a case to be said for a $500 a share Apple stock price. And there's a big reason why I think that's going to happen. And it has to do with what I want to talk about next. And that is the elephant in the room, the presidential debate. All right, so presidential debate happened this week. Who do you think won? I got to say, after watching that thing, I'd like to take 24 hours to digest anything that is emotional. It was emotional on both sides. I mean, think about it. I kind of think back and I think Trump could have came more prepared. I think he came in. I actually think maybe he's doing too. I mean, I don't know if there's such a thing as too many, too many stops, whistle stops, if you want to call them that, or Trump stops, going out and hitting the base and doing all the interviews because he's done like 40 of them in the past couple months. And so I think he could have come more prepared. I don't think he really had anything new to say. I also think Harris holed up so much, hasn't really talked to anybody, and yeah, had a lot of preparation. But it sounded a lot like the message that she touted at the DNC. A lot of high-level promises, really didn't answer a single question directly. So what ended up coming out of the debate? I don't think America learned anything. I know that I can't get back those 90 minutes or 2 hours. And that might be what part of the reason why the stock market dropped off the day after. So let's move forward. All right. No going back. All right. Well, so we're 50 plus minus days before election day. I think the person that occupies 1600 Pennsylvania Avenue, I think the person that sits behind the Resolute desk is not the one that controls your destiny. It's definitely not the one that controls mine. So I think we have to think out past the election, and you've got to ask yourself 3 questions. Question 1, which companies win under a Trump term? Which industries and which companies are winners? Question 2, what industries and what companies win under a Harris term? And most importantly, what's the top industry that I believe is going to win regardless? That's what I want to talk about now for our final piece of this Patterns and Profits podcast. So let's talk about if Trump were to be reelected. So if Trump gets reelected, I mean, there's several different areas we could go in sectors and stocks that could potentially benefit. And this is based on patterns, historical patterns that are aligned with his philosophy and his past administration. Let me give you my top three. Number one, the energy sector. Okay. Trump's been pro energy. He's been pro energy independence. He's been pro fossil fuels. You know what? I really can't say that. He's basically says, get what you want for a car. He could care less. In fact, I think Elon Musk even was on, his platform, X, saying that he didn't care if the government dropped the rebates. It wasn't going to help or hurt him at all. But if you look at oil and gas, I think it definitely pops and moves higher if we have a Trump presidency, right? And companies I think of right off the bat, Exxon and Chevron. And it's not because they are oil and gas. It's because they refine oil and gas. Oil and gas could go lower and Exxon and Chevron could move higher because all of that would become more and more a priority in the U.S. The second area that I think would do really well would be defense. I mean, Donald Trump's been pro-military, and I think that the military spend would increase under a Trump presidency. And so immediately I think of Lockheed and Raytheon. I mean, these are two examples of companies that benefited in the 2017 to 2020 era, and I think they would benefit in 2025 and beyond. And then finally, deregulation. All right, so he says for every one new regulation that comes in, that he would cut 10. I think that's a bit rich. I think two would be enough. If you bring one in, you cut two others. Deregulation in the finance sector would definitely benefit Bank of America, would definitely benefit Goldman Sachs. Okay. So those are three sectors that historically performed well in 2017 and to 2020. They did really well. It's a pattern, folks. This is patterns and profits. We're talking about patterns. And so, you look at that. You look at, deregulation, you look at tax cuts, you look at onshore and even offshore drilling for energy independence. All right. How about if we get a Harris presidency? New president, but you know what? Same policies. I'm gonna go with the patterns of the same policies that have been happening for these 4 years. Number one, instead of dirty energy, let's pivot back to clean energy. So, it's hard to get an idea on what President Harris actually thinks because there's been a lot of, different opinion. But if you just take the patterns that her and President Biden have been doing and use those, clean energy is going to be at the top. So I'm talking about solar, and I'm talking about wind, and I'm talking about electric vehicles. And although Tesla has been, I think, so look at what happened. Look at what happened in the last 4 years. I mean, all of the vehicle manufacturers got invited to the White House. I remember this like it was yesterday, and they didn't invite who I think was the pioneer of electric vehicles, Elon Musk. And I think because of his pulling out of California, moving all of it, most of his businesses to Texas, and then coming out for Donald Trump, I think they're going to put a hurting on him. But I still think Tesla comes out a winner because of electric vehicles and clean energy. They can't give rebates to Ford, GM, and Chrysler and not give rebates to Tesla, although they may try. I think Tesla does well. And I think a company like Enphase Energy, they're basically a solar company. and operate on solar technology. I think they do real well too. The other thing that's done very well during the Biden Harris administration, I think would continue to do well, would be tech companies. Okay, 5G, AI, and we're talking, Microsoft, Alphabet, Nvidia, the same ones that have done so well over these last 4 years. And then the other area that I think would be beneficial in a Harris administration would be education. And I'm thinking of, companies like, well, Salesforce, would be in that area. Um, but also, online learning, education technology, maybe Chegg, maybe Coursera. These are companies I think that would benefit. So clean energy, healthcare, education. That's the area that I think a Harris administration would positively benefit. So, what's the biggest winner, regardless of who's going to get elected, and what's the biggest loser, regardless of who's going to get elected? Again, my opinions based on patterns. Number one sector, regardless of who gets elected, it was brought up in this week's debate earlier this week. Here it is: healthcare. Healthcare, because you got the Affordable Health Care Act. I call it the Unaffordable Health Care Act because it really hurts people that are trying to get ahead. Because the more money you make, the more money you have to spend on healthcare. I mean, that's the world we live in right now. I think healthcare costs are going to continue to rise as long as we continue to subsidize healthcare companies with taxpayer dollars. It's just simple math. Wherever the money goes, price increases come along with it. And healthcare has been one of those areas that just continues to increase year after year. Look at the cost of healthcare insurance. It's out of control. And then you take a look at United Healthcare. This is my number one pick in the healthcare industry. It's the 800-pound gorilla in the room. That stock price. Take a look at UNC. Go back a couple decades. 19,000%, folks. This should be, the Mag 7. This is the Mag 1. This is the Mac Daddy. Number one company of any company I've researched during that time frame. And as baby boomers continue to age and Gen X gets, into their 60s and they start to age, then companies like United Healthcare are only going to benefit. So that's the number one investment stock that I see happening over the next several years. And you know what the biggest loser is? The biggest loser after the debate? US dollar. I mean, look at the US dollar. If you take a look at the average value or lack of value that the US dollar returns to us just holding it. If you bury it, it's worth about 8% less each year on average. Okay. Our dollar loses 8% of its value each year, regardless of who's in office. Unfortunately, in the last 4 years, we've got interest rates that are up significantly from where they are. And now the national debt is larger than any policy, any gift, any war, anything I can think of on a year-by-year basis. And nobody talked about that this week. I mean, ABC completely glossed over it, didn't talk about the national debt. No one talked about the national debt. I think that and inflation are probably the biggest two most important points going forward, regardless of who you like in this election. Those are the big things. One is right in your face, and that's inflation. The other is that can that just seems to get kicked down the road every 4 years. And, you look at the US dollar and you got to start thinking like an investor. This is what I tell my kids. This is what I tell my friends. You can't have too much cash is not a good thing long term. You hear all these folks saying have an emergency fund, and I absolutely agree with that. But anything in excess of an emergency fund, you need to put that in assets. That has to be as a long-term investor. You got to think about assets that return more than 8% a year, not taxed. If you're a long-term trader who exits positions, you got to think about long-term capital gains. Then you need to have something that moves a little less than 10% a year, because you're going to pay tax every time you move that money. Every time you sell something, that VIG, you're giving that cut to the government. And what about short-term income traders? Then you got to be making that 12 to 13% a year to cover the short-term tax, maybe even more, depending on who you are, to cover your short-term gains. And folks, these numbers are just break-even numbers. So the worst thing that you can do, especially after looking at this election, the worst thing that you can do going forward the next 4 years, because take a look at what happened in the last 4 years. The US dollar its purchasing power got absolutely decimated. So if there's anything we've learned in the last 4 years, is put your money to work. Put your money to work in something that makes money. All right. Hey, I hope you enjoyed the podcast for the day. Yeah, I ran a little longer than I normally do, but we had to get some things. I needed to get some things off my chest, and we had a lot to unpack here. Join me every week. I've got videos. I do videos on the markets. I do videos in different areas. I did a shoe video last week. I thought was kind of cool. Got a lot of comments on it. I think I'm going to get into the airline industry because I recently flew, and it just brought back a lot of long-term good memories about air travel and a lot of short-term bad memories. So I'm gonna do something in the airline industry next week. So be on the lookout for that, guys. Hope you have a great weekend. We'll talk to you soon. Bye now.